Looking at Bitcoin hitting 100K reminds me of something I learned from Jesse Livermore about psychological price levels. After analyzing half a decade of market data, I've noticed something fascinating about these major breakout points. Today, I'll show you what history tells us about what happens next. But before we dive in, let me be clear. I'm not a crypto evangelist. I'm a technical analyst with half a decade of experience trading stocks. I focus purely on price action and psychology. If you want to see exactly how I analyze these setups, including the patterns that led to winners like SMCI, which did 240% this year, Appfolio, which did 300% this year, and NVDA, which did 200%. Make sure to grab my free trading systems through the Profit Punch newsletter in the link below. You'll get both my investors pattern playbook and the swing traders gap up strategy, the same strategies I use to spot various moves before they happen. I also spend over 20 hours each week researching these setups to bring you the best opportunities. So if you find value in this analysis, please hit that like button and subscribe. It helps me continue creating this in-depth research. Now, let's look at Bitcoin's historical patterns and see what they mean for traders. So I have my weekly chart on the left and I have my daily chart on the right. We always want to be looking at the long-term frame and the shorter time frame so that we can see the bigger picture on the longer time frame, and in the shorter time frame we can see exactly where to get in. As you can see, I showed my subscribers to get into Bitcoin when it was right around $74,000, and today it has already gone up 35% from the time I told them. People have already made profit from that. Sign up to the newsletter if you like to stay ahead of these moves. Let's look at what Bitcoin is doing. The first thing we should see is that Bitcoin is hitting 100,000. Now, round numbers are psychological numbers in the stock market and securities. Jesse Livermore, who is one of the greatest traders ever, had something called the rule of 100. In the book Reminiscence of a Stock Operator, Jesse Livermore was trading a stock called Anaconda Copper Shares, and he wrote in his trading diary, "It was an old trading theory of mine that whenever a stock crossed $100, $200, or $300 for the first time, the price does not stop there but goes a good deal higher, so that if you buy it as soon as it crosses the line, it is almost certain to show you a profit. On the other hand, if the stock reached that price and failed to move past $100 or that round number and then fell back down, it was showing that it has been psychologically rejected and he would have to sell it immediately." That is something we're seeing in Bitcoin 100K. We want to see Bitcoin go through 100K and maybe go to 110,000. Right now, it's just been around that price for a long time, so it is still at that psychological number. That's why it keeps pausing there for a while. But that's enough of the 100K. The first thing we have to see if we want to predict what's going to happen to Bitcoin in the future, let's see what happened in the past. If we look at the 2016 to 2018 Bitcoin run, we can see a big cup with a handle. I show you the first place where you could have entered. Of course, ideally, if you're an early investor, you could have actually bought it here around $600. But let's say you missed it. What you normally want to do is you want to see a major breakout on huge volume. I color code my bars. So on my bars, whenever you see a green bar, that means that week had very huge volume compared to a lot of the other weeks. So we see big breakouts. I didn't include this one initially because it hadn't gone to all-time highs yet, but this is the breakout that you could have bought. And then here we see Bitcoin starting to go to all-time highs for the first time. It goes to all-time highs, but it always pulls back to the 10-week moving average. On the weekly chart, we have two moving averages, the 10-week and the 30-week. When a stock or a security goes to all-time highs, that means that there are no angry people waiting to sell the stock. That's why there are moves like this. You can see that it went up 2,500%. So this was a very big gain. And whenever a security goes from a big base like this, we can almost always expect that it will always return to the 50-day moving average. And this can be a point to add to our stock or to buy if we missed out on the initial breakout. So here we can see you could have gotten in here, you could have held through here, or you can add to your position. I normally try to double my position. Here, the second base out of this big cup and handle, this was a very good time to add to your position. And this was the last time I would say you could have bought Bitcoin before it came and formed the top. So we had several buying opportunities. Same thing happens in the 2020 to 2021 run. These are historical moves that keep repeating over and over again. Here on the weekly chart, you can see we have our big cup and handle. Whenever you see yellow bars like this, that means that was very tight price action. And the volume was also low. So we see here tight price action on low volume. That's a very good sign in our base. Here we see the first breakout. And then here we see a point where we could have added to a stock. This is something tricky to see on the weekly chart, so we can go to the daily chart to see exactly what happened. This was very tight price action here. So you could have added as soon as it breaks out here. It went over 20,000. That was also a psychological number. Remember the round number rule that I told you before. It did that, and then here it comes back and then goes to the 50-day moving average. So you want to keep your eye on both the long-term chart, which is the weekly chart, and then the daily chart on the side. So here we see our consolidation. Those consolidations must always be at least 4 weeks. You want to see at least it's taking 4 weeks to go to the 50-day moving average. So we see that here, and then this was a point to buy again. So you could have bought here, and then you could have enjoyed the last move, which was about 70%. It looks very small because this is a logarithmic chart, and this is a move in the past, but it wasn't a really small move. You could have gotten in here 35,000. The maximum profit you could have gotten was about 75%. And seeing that history, now we can go to what is happening, right? These old buy points, if you're looking at them, these are buy points that I issued out before, but those have already been missed. But don't worry, let's see what Bitcoin might do in the future. So we've seen that whenever it breaks out to all-time highs on big volume, that is a very good sign. We see the green bars, that is a great sign. So what do we expect next? Remember the two things we expect next. We want to see tight week action. If we see 2 to 3 weeks that have very tight price action, that is a point where we can add if we had already initiated a position as long-term investors. But if you had not initiated a position before, what you're waiting for is a consolidation to the 50-day simple moving average or the 10-week simple moving average. So we want to see a consolidation that takes at least 4 weeks, something like which happened here. And once it breaks out, you can buy again. So here we see it break out of a big base, forms this consolidation, breaks out again. Now, for those who had already bought here initially, this is the point to add to your position. So if you had 10% of your account here, right, so you can increase your shares times 1.5 and enjoy this other ride. So from my past experience and my research, I found out that the big base breakout and the second base that forms right after the biggest base breakout, those are the most trustworthy times to buy as an investor. Any bases after that, you can see them more as trading opportunities, but not times to really initiate a very big position. So you always want to be watching these cryptocurrencies so that you can get these moves exactly as they break out, because you don't want to miss them. We're waiting for tight price action on the weekly chart, which is something which we are likely to see very soon. Then we can add to our position. But if it does a base where it pulls back to the 50-day simple moving average, then that is also a point where we can add to a position or initiate new moves if we are not in this security. I hope you found value in this video. May the markets be with you.